Right. And today's rates are so low already. I was just reading this morning, they're as low as, you're the expert here, Crey, I don't mean to step on your toes, but between 4 and 5% right now on FHA 30-year fixed loans. That's pretty low already. So if you don't pay a point, you still get a pretty good rate.
Yes, I priced a loan out today on a $325,000 sales price in Montgomery County with a 30-day lock-in. You could lock in today with an interest rate of 5% with 0 points. On a Montgomery County property, you're looking at about total cash needed of $22,016, of which you, the borrower, needs to bring your minimum down payment of 3.5%, which is $11,375. So on this purchase price scenario of $325,000, if a borrower has $11,375, and we can get a seller to contribute just a little above 3% towards seller concessions to cover the difference between the $22,016 due at settlement, they'll be able to get in that property for $11,375, which, it just goes to show FHA is a fantastic product for first-time home buyers, second-time home buyers, anybody in the market that is a little bit challenged with cash. The ratios are great, meaning the allowable percentage of what your monthly income is that can be used towards mortgages and mortgages plus your monthly liabilities. It's just a great product to get people in properties. I will stress that with these changes, there will be some parties that are currently able to purchase that will, after the changes, not be able to purchase.
Right.
So it's important for those people that know that they're within that, less than 580 range to try to move forward right now to get into a property so that they can qualify based under FHA's current guidelines.
Right. Now, assuming that somebody has a credit score of above 580, though, what you just mentioned, I think it's important for us to stress this, is you can purchase a house in Montgomery County, for example, at a sales price of $325,000, and the buyer should be expected to come to settlement with just under $12,000, even after the changes that we're talking about with the FHA guidelines, correct?
That's correct. You'll be looking at monthly payments that probably about $2,150 a month, $2,150 a month, which would cover your amount owed to the bank for principal and interest. It will cover the monthly mortgage insurance that FHA will charge. It will cover estimated property taxes and estimated homeowners insurance. So once again, a $325 purchase will cost you about $12,250 cash out of pocket. Mm-hmm. It will result in a monthly payment of about $2,150. And depending on your tax, where your tax for federal and state taxes, that's equivalent to renting a property for close to about $1,600. So that's a great program, great reason to purchase and get into a house, start building some equity and living in a property and call your own.
Yes, I couldn't agree with you more, and that's an important ratio to keep in mind is monthly payment in a mortgage compared to what it would cost you to rent it. And that's a pretty interesting, that's about $400, $500 spread once you take into account the tax benefits of owning property. So a mortgage payment of $2,150 is equivalent to $1,600 per month in rent. That's an interesting ratio.
And that does vary. That's based more along the lines of the minimum tax bracket at 28% for federal and 7% for state. Mm-hmm. If you find yourself self-employed where you're paying a much higher amount in taxes to federal, then that really would result in comparing it to a much lower rent per month. And that's something that I'm happy to discuss with any borrowers on a independent scenario, just to give them exact numbers.
So these changes, although they sound initially like they're pretty major changes, I mean, once you put it into perspective and you can kind of relate to the current market conditions, the low interest rates and the high inventory and low buyer demand, it's still a great time to buy a property.